Hey everyone, Jeff Dorman, Chief Investment Officer at Arca, back for another edition of That's Our Two Satoshis Live. This week I am joined by Rooster from Top Gun Maverick, also known as Wes Hansen, Director of Trading and Operations at Arca. How you doing, pal?
Good. How you guys doing?
Great. All right. Before we get started, as always, a quick disclaimer. This commentary is not intended to be investment advice, investment research, or a recommendation. Please consult your investment professional for your own circumstances. But for those who are new to this, every week we write about the digital asset market. We've been doing it for almost 5 years now. You can find the actual blog on our website, ar.ca/blog. Every week we talk about different things. And this week, first thing we're talking about, of course, is the market rally. It's funny because we talk every day at Arca about things that are driving digital asset price. I think most of you who have seen this That's Our Two Satoshis Live or have read some of the pieces, we've been talking about the decoupling of macro now for a couple months. But that doesn't mean that macro isn't one of the drivers. It just means that macro isn't the only driver. Last week, definitely part of the driver, right? We basically saw global central bank coordination a week ago Friday, where you had the BOJ, the B of E, even the ECB and the Federal Reserve all coming out with somewhat either explicit or implicitly dovish remarks, basically giving a light at the end of the tunnel to this rate hiking cycle. And actually, Wes, I'm going to read you. This is what happened on our internal communication at Arca. On Friday, October 21st, we were talking over Slack, and I said, digital assets really lagging here. Would not be shocked if we get a plus 10 to 20% weekend. Feels like anything with high short interest is going to squeeze hard this weekend. Plus, dealers continue to point out the low levels in both implied and realized vol and how this consolidation usually precedes a fast move in either direction. And then, of course, the weekend came and nothing happened. And it took until Tuesday or Wednesday of last week before we really started to see the big move. And there was a huge short squeeze with, $700 million worth of shorts liquidated on back-to-back days. So what do you think here? How bad was positioning? Was this as telegraphed as it seems to have been in retrospect, or do you think there were other factors that drove some of this buying and ultimately these shorts being liquidated?
Yeah, I think it's a number of things. There definitely were a lot of people that were just, going to play the downside until it didn't work and they got caught in a squeeze. I don't think everyone's come back in on this move yet. There's still a lot of cash on the sidelines, but absolutely, there were people that were just going to stay short and keep selling the market until it didn't work.
Yeah, and I thought that was interesting is we've been talking about for months really that there's been a lot of interesting things happening in digital asset land that had nothing to do with Bitcoin or Ethereum, right? The merge happened, a month and a half ago. But we've seen a lot of interesting governance and management changes in DeFi. We saw some interesting Web3 partnerships, especially led by Polygon. We've seen some, distress situations and liquidations and bankruptcies, all these different interesting things. But Bitcoin and ETH really weren't the story until last week. And then, of course, most of these short liquidations came at the hands of people who were shorting, Bitcoin and ETH. And I think the real question for me is why were people still short? Obviously there's a lot of bad news in the market. There's certainly a lot of reasons why you would be skeptical about growth. Everything from what the central banks are doing to a slowdown in real estate to a slowdown in earnings to, midterm elections. There's certainly a lot of risk out there. But I think a lot of times investors and traders forget that when bad news stops knocking markets down, but good news continues to move markets up, that's usually a sign of the sentiment and positioning is just so bearish that it's just really hard to get a downward move. In fact, you saw it in bank earnings last week. Bank earnings from Bank of America, JP Morgan, Citi, Morgan Stanley, et cetera, were all down on a year-over-year basis, anywhere from 8 to 40%. But in October, bank stocks were all up 5 to 20%. Indicating that's not really the news itself, but the reaction to the news in terms of how the positioning is. And we saw it in ETH post the merge, right? I mean, open interest was skyrocketing in ETH, but funding rates remained negative, which means that people were just piling on the shorts. Why? You think that's just, if it ain't broke, don't fix it? Shorts have been working all year, so let's just keep going, even though there was clearly a positive kind of shift to the market?
I mean, in our market, it definitely, I think one of the biggest things is that there's so many investors out there that just trade the momentum. And they're going to keep selling when we're going down and until it doesn't work. And the same will happen on the rebound when we get out of the bear market. They'll just keep buying. It's so much of our space is momentum driven, especially when it comes to Bitcoin and ETH.
Yeah, and this will be interesting now to see what the follow through on this is, right? Because usually when you see that many shorts liquidated, it's kind of a natural reset. Same thing on the other side, right? You have a ton of longs that get liquidated, you kind of get a reset. we definitely had a reset. A lot of shorts were liquidated. Funding rates turned from negative to positive. It'll be interesting to see what kind of follow through, because as you mentioned, there will definitely be some momentum funds that start to get back in, although I don't think we've really gotten to the technical level where they care yet, right? Where Bitcoin and ETH have to go to where before you start to see that real kind of momentum flip?
Yeah, I mean, the big one for ETH, I think 2K will be a big flip. For Bitcoin, 24 is big. A lot of people are looking at 28, but you have the 200-day moving average is about 24.6 right now. So I think getting above the 200-day is big.
Yeah, so at least in terms of Bitcoin and ETH, we're at some interesting inflection points here, right? You got a little ways to go before the real momentum buyers come back, but at the same time, you got a big economic calendar next week, right? Or rather this week, right? You've got the Fed coming out, most likely 75 bips, although we don't know what Powell will say. You've got a big jobs report on Friday, then obviously the midterms next week. So a lot of things that could drive pricing here, but I think it's pretty clear that even after the washout, the sentiment is still just overly negative here. Still too much cash on the sidelines, and it's pretty supportive of risk prices. So I wanted to flip over to, speaking of cash on the sidelines, you've been talking a lot recently about what's been happening to USDC and overall stablecoins. And what we, kind of a joint effort, you and I, but we were talking about how, stablecoins used to just be a fight for market share. It was just, who's going to have the biggest AUM and therefore have the kind of biggest brand and be the biggest trading pair. But the reality is now stablecoins are becoming big business from a profit standpoint, because these stablecoins, you give $1 million to Bitfinex for Tether, or to Circle for USDC, or to Binance for BUSD, and you get the stablecoin back. Well, they're taking that $1 million you gave them and they're investing it in the market. And for a decade, there's been low rates and nothing to do. But now all of a sudden, you've got 2-year treasuries at 4%. You've got commercial paper, yielding anywhere from 4.5% to 5%. You've just got a lot of different places to park that money. And that money is not being given back to the token holders. That money is just being housed by Circle and Bitfinex and Binance. So this is becoming a real lucrative business. And as a result, we've been monitoring the flows in and out, and there's been some pretty big shifts. You wrote starting back in May and June, when Terra Luna and UST first imploded, there was a really pretty big shift in a decline in Tether AUM and a rise in USDC. And then subsequently, we're seeing the opposite, right? We're seeing USDC balances start to come back down. You're seeing Tether and now BUSD from Binance going back up. What are some of the things that you've seen from a stablecoin standpoint, both in terms of why this is happening, what dealers are doing from a market making standpoint, and anything else that you've seen, with regard to kind of this race for these stable profits?
Yeah, I mean, I think the biggest shift, it was shorter term in nature, but the biggest shift was in May when UST collapsed. And right on the heels of that, you had another strong push led by traditional investors, another strong push to short Tether. And with the collapse of UST and Tether being under pressure, everyone was, running to USDC. It was definitely a flight to quality. And I think, that was the natural recipient of that in terms of the largest player out there, one of the largest players out there, but the largest that everyone felt comfortable with. Though I know there was even talk of people shorting.
We put a chart in the blog that showed that too, that the USDC went from about 40 billion up to a peak of about 48 billion in assets around that time. So it was a pretty big move. I mean, that's not a small amount of assets rushing from a flight to quality standpoint directly into USDC.
Yeah, it spiked really quickly. And there was a push on Tether. I think it got down to about 92 cents maybe, but it's come back, and I think people are less concerned with Tether right now, though I know I talked to a lot of dealers and a lot of desks that are still seeing people come in to stay long-term short Tether. Some people are using it as a hedge to the market. Some people just think that there's issues there where there's smoke, sort of. The other big thing that we've seen more recently that's given rise to a huge increase in BUSD is Binance's shift towards consolidated markets to try and promote BUSD adoption. And, that's part of what you were discussing earlier. This is big business now. And with rates as high as they are, these companies can make a ton of money just gathering assets.
Yeah. So what does that mean? You've been a trader for a long time across multiple different markets. I was a fixed income guy before digital assets, and I'm used to fragmented markets, right? Where, you had 65 different dealers quoting you a bond price, and you just pick whoever your buddy was or whoever had the best price to transact with. But ultimately, you didn't actually have to transfer any funds until after the trade happened. Whereas we know in digital asset land, you have to pre-fund this, right? The market makers have to have physical assets at all these different fragmented exchanges. It always made no sense to me that you had a massive trading pair with Tether and a massive trading pair with USDC or with Binance USD, and you had all these different trading pairs that just forced market makers to be very inefficient with their capital. Now, the push to consolidate that, where on any given exchange, you really only have one major trading pair. I mean, to me, that made all the sense in the world. Why did it take so long for the exchanges to do this? Or is it really just because, as we said, with rates higher, it's just lucrative and you want to consolidate as much as you can into that stablecoin?
Yeah, I think FTX was probably the first large exchange to run a consolidated book where they had pretty much every stable coin except for Tether was just classified as USD, and then there were USDT markets. And so FTX was first to do that, and I think it helped with liquidity on their exchange, and so more people were going there to trade. But I think you're right that the rise in rates has really prompted this more so. From what I can tell, the exchanges wanted to offer as many different pairs as possible because they thought the selection, the breadth of selection there was a benefit, but it really removed liquidity and made it difficult for market makers. And it even made it difficult, if we wanted to trade a single asset across multiple exchanges, some pairs were USDT, some were USD, some were USDC, and it made it different. You couldn't easily trade across exchanges because of that.
Yeah, I mean, Binance clearly is the biggest winner here, right? I mean, Binance already does 60 or 70% of all spot business anyway in the markets. For them to basically say, okay, from now on, you're trading against our own Binance USD stablecoin. I mean, that's a huge win for them. There's a reason that the AUM of the BUSD went from 12 billion to 20 billion in the last couple of months. And I think that trend's only going to continue. I think Tether is pretty ingrained in most digital asset participants' brains at this point of just being the most universal and certainly the one with the least amount of regulation and the easiest to transfer. I think the big loser here is USDC. And I remember, Jeremy Allaire at Circle came out as soon as Binance made the news that they were going to discontinue other stablecoin pairs and focus on BUSD. I think, Jeremy Allaire came out with Binance was bullish for USDC, as he should. I mean, he's the creator of that. He needs to come out with reasons why this is good for USDC. But I think the market is pretty much telling you otherwise, which is that USDC is not only in the U.S. regulatory crosshairs, which makes it harder for some people to use anyway, but also just doesn't have that natural kind of home where it's the trading pair of choice, right? Most of the volume still happens on centralized exchanges, and that's dominated by Tether and by BUSD. I think for USDC to really grow again, you're going to have to see DeFi really pick up, because I think USDC is the asset of choice for most of the DeFi platforms. So it'll be interesting. I think this is a heavyweight bout, right? I mean, there's a lot of money on the line. If you're talking about 4% short-term interest rates, and you're looking at Tether with 70 billion of assets, that's $2.8 billion a year for basically doing nothing. I mean, that's grayscale territory in terms of just making money for doing absolutely nothing. So I think this is a lot of money that these stablecoin issuers are going to be chasing. It'll be interesting to see how this plays out and how USDC retaliates. Maybe they sign a big partnership with an exchange where they become the exclusive market making pair. But it's worth keeping an eye on, because there is a lot of cash in the market represented by these stablecoins, and it's only going to keep growing. I mean, stablecoins is 170 billion in total, up from 0 2 years ago, and really hasn't fallen much at all, despite the UST collapse and despite all the issues that are happening in the market around it. So I think this is not the last time we'll be talking about it. We'll definitely have you back on to see how this develops. But stablecoins is I joke that it's not just stable coins anymore; it's stable profits. I mean, this is real money on the line, and I don't think this is the last we'll see of the jockeying. So anyway, with that in mind, everyone, I appreciate your time. Feel free to check out the blog again on our website at ar.ca. You can check Wes on Twitter. What's your Twitter handle?
Go for Wes.
At Go for Wes. You can also see Wes running around Los Angeles dressed as Rooster from Top Gun Maverick tonight. So any way you can, reach out to the ARCA team. Give us any feedback, any questions. Love to hear from you. Happy Halloween, everyone. Stay safe, and we'll be back next week.
Thanks, Jeff.